Welcome back, and joining me for a closer look of the day's trading session is Jordan Toy from Legacy Family Wealth. Jordan, thanks so much for your time this evening. It's always lovely to have you in studio with us. So trade quite choppy today. We're seeing markets really flip-flopping, one moment in the green, the next moment in the red. And I've been wondering why, because that Fed rate cut is pretty much priced in. What are investors nervous about? How big the rate cut could be, or just nervous ahead of, I guess, some commentary from Fed Chair Jerome Powell?
Certainly, it's a difficult one to interpret at times. I think one sort of saying that stuck out to me today was sort of the buy the rumor, sell the news kind of story, which I think could be some of the case today, especially when you have markets pricing in, or the expectation near a certainty that we're having a rate cut today from the US Federal Reserve, and potentially a 25 basis point rate cut. So I think, when you have such a high degree of certainty, and let's be clear, you can never be certain around these things, but when the market views the probability is so high, I think that often you get this choppiness where a lot of the move has arguably occurred already, and it's just a case of what we actually see in the press conference, as you mentioned, after that announcement later this evening.
So just monetary policy aside, there's been a report out that NVIDIA won't be allowed to sell some of its chips in China. We did see NVIDIA under pressure on the back of that, and that also weighing on the NASDAQ this evening. Is this something to really be concerned about, considering that NVIDIA had already stomached, I guess, some of the losses that come with not being able to sell in China for the past few quarters?
Yes, so from my perspective, definitely not good news.
Yes.
But I think not entirely surprising. I mean, the CEO of NVIDIA himself was mentioning to analysts in various recent sort of earnings announcements and so on that they should exclude any China sales from their forecasts because it has become a very politicized topic. So, I mean, I was thinking about it earlier today. We've gone from a position of NVIDIA built chips specifically for China because the US administration didn't want the fastest chips there. So they did that. And then they were selling those chips to China, all was fine. Then the US administration decided, no, you can't sell those chips anymore, so NVIDIA stopped. Then they were allowed to again. Then the US administration wanted a cut of that revenue. And, recently China's been, it was interesting today, they've been saying, or discouraging their companies from buying NVIDIA chips, and now it appears to be an outright order. So we've sort of gone full circle on this topic. Obviously not great for NVIDIA, difficult environment to plan in. But, I think there was a quote out of their CEO today that sort of said, look, this is there's bigger issues at play, and there certainly are, and especially with the trade talks going on with the US and China.
Exactly, I thought as much. You'd think that perhaps that would be on their agenda, and now we're hearing this out of the Chinese government.
I think it's negotiating tactics. So we know that TikTok's been sort of the more recent focus, or it appears to be the recent focus in some of those discussions. But I certainly think it's, this is a negotiation, and each party is looking to apply pressure selectively in specific areas. I think it's disappointing for any NVIDIA shareholder. That I do believe that their equipment is still the best in the world. China appears to be catching up rapidly. So difficult to call from here, but certainly a lot of politics at play.
All right, let's bring it back home, where we saw inflation decelerating last month at 3.3% from 3.5% in July. Many analysts expected consumer prices to hold steady, right? What did you make of this print that we are seeing? Could we be estimating the volatility that's been playing out in food prices? Because that's been the one thing that's actually been pushing up those consumer prices.
100%. I'm glad you mentioned food prices as a component. I mean, the thing that really jumped out at me with Heritage Day coming around next week, and sort of meat jumped out at me. Specific cuts of beef are up sort of 27 to 30% year on year. So, people across the country are likely going to be braaiing or cooking over a fire next week at one point or another, and it's costing a lot more. So certainly meat contributing to some of the inflation print, but on the decrease side, or the slightly less impactful stuff, we had fuel and oil is always a factor that helped. I think broadly speaking, it gives a little bit of pressure relief to the South African Reserve Bank. We know that they're looking at, or they've advocated for that 3% target. It's a difficult one in the sense of we've got administered prices as well, so I don't know how that plays out in the long term, where we've got sort of electricity, water, things like that costing more and more. Whether they can stick to that 3% target. previously they've guided that inflation, they expect it to increase sort of towards the high 3% range as we progress. So this is largely still in line with that, and pleasing as well to see that inflation expectations from the BER in the Western Cape is largely under control, closer to that 3% mark, which is a big factor in actual inflation that manifests, is consumers' expectations of inflation, because how do you set prices in your business? You try and look forward and anticipate what general inflation will be.
And Jordan, we could talk forever. We really could. But unfortunately, we've run out of time, so I have to get your stock pick. Where are you seeing opportunity at the moment?
Yes, so briefly, one that I haven't talked about before, I wanted to mention Robinhood. It's not an all too unfamiliar company in the US. I think and to be clear, it's one on my watch list, not necessarily in portfolios at the moment, but massive gains year to date, as well as over a 1 year period. Obviously been in the news quite a bit with their revenue structures, and payment for order flow is a big way that they earn fees. To just take a step back, they're effectively a brokerage. So an easy to use, very approachable system for buying and selling shares, options, ETFs. And I think what they've done really well is how they've positioned themselves for the younger, tech-savvy consumer. The investment world is full of complicated acronyms and appears to be a very difficult place to operate in. So their whole thing is, as the name suggests, Robinhood, democratizing investing. And I think the trend that they're on is a very interesting one, right? They're not just looking at traditional assets. Cryptocurrencies have been added to their platform. They're increasingly trying to bring private markets to their trading platform, and a lot of just very easy to use systems. So I think the direction that broader tech is going, it positions that company, or they are positioned well to capitalize on those trends. But the big risk is the payment for order flow. We know that they've been in trouble with that before. Okay, so Robinhood, one to look out for. Jordan, thanks so much for your time and taking us through trade this evening. Now, that was Jordan Toy from Legacy Family Wealth.